In today's video, I'm gonna share with you guys how we can use footprint charts to trade order flow reversals like this. So let's take a look at the first example right here. We can see from this period of time, the market has a little bit of a rally up. And then what happens? We get a wick on top of this candle. Then we get a little bit of a pullback. However, were there any warning signs that maybe showed up in the order flow before we even got the wick over here on this candle? I'm gonna go ahead and give you guys a spoiler alert. Yes, there was most definitely order flow signs. Now, if we come over and we look at this footprint chart, and if you've never looked at a footprint chart before, let's talk about a couple key things that you need to understand first. The column on the right-hand side are basically orders that were transacted on the ask side of the market. Orders on the left-hand column are orders that were transacted on the bid. Now, orders that are transacted on the bid are basically labeled as aggressive sell orders. It'll register on the time and sales, the order being executed on the ask price. Now, we're looking at comparisons in the footprint chart. There's one thing that you need to be well aware of. We are looking at diagonal comparisons. So I'm looking, let's say, at 103, and I'm comparing that to 142. And the reason for that is when we look at a bid-ask spread, the bid-ask is not going to be exactly horizontal across from each other. We're not going to have the same bid price as the same ask price. There is always going to be a spread between the bid and the ask. Now, in lower liquidity markets, that difference between the bid and ask is going to be a lot greater. Now, if you have lifetime license to NinjaTrader, the footprint charts are included. There's also other third-party solutions you can use for the footprint charts within NinjaTrader. But if you're using the NinjaTrader platform, just right click on the chart, go over here to where it says data series, left click on that. Right up here where it says type, you want to select right down here where it says volume metric. Then once you're at that level right there, you can say, okay, base period, do you want it to be a tick, range, volume, second? And this, for this example, I'm going to keep it on a minute base, and I got it set for 1 minute. The delta type I'm using for this video example is going to be the bid ask. That's normally the footprint chart type that I use. Now, as we're looking at this, there's some other key factors that we need to pay attention to. On the footprint charts, I have mine where I also have a volume profile, and in yellow, this is going to be the price point that had the most amount of contracts traded in it within that specific footprint bar. So in this example, we have 169 and 123. That is the single highest volume of this entire candle. Now, that's something you cannot see by just looking at a basic candlestick chart. Now, that's going to be important as I start go ahead and laying out why we knew ahead of time that the market was likely going to go ahead and suffer a bit of a pullback over here. But first, if you guys want a way to support the channel at no additional cost, make sure to use the links in the description box down below. Now, let's talk about another key component that I'm using with these footprint charts, and this is going to be delta. You can see the delta right down here at the bottom of the chart. This candle right here had minus 359. This one had plus 287, minus 11, minus 76, minus 172, so on and so forth. So that's going to be critical as well, because that's going to show us, one, how strong the market is in any one direction, and also two, are we starting to see early signs of weakness in this market? And we zoom this out a bit, one thing that already had me scratching my head saying, uh-oh, this move up may not be as strong as it first looks, especially when we look right over here. These candles right here are the same exact candles that we're looking at the footprint charts on. So when we look right down here, as we start to push up, notice the first two candles both have negative delta. You can see it's green within the candle. So that means that 1 minute candle actually closed higher than where it opened up. Now, we did see we get decent delta on this bar right here at 942, but there's a problem with it. And I want you guys to pay attention to where the location is of the point of control. In this example, within this bar, the point of control is at the top of the candle. That could be a warning sign that watch out, even though the market pushed up higher, that could give us a heads up that we're starting to see some absorption in the market. When you see an up candle in the market, you really want the delta to be in the lower half of the candle, preferably like we saw over here, delta in the lower third of the candle. Right here, delta in the lower third of the candle. Now, when we came up here and we started to pull back, notice the delta was in the top of these two candles right over here. So what do we get once we got that push up? We had the point of control that was closing near the upper end of the candle. All right, check mark. That is one bearish sign. Then we look at the next delta right down here at 943. The delta was a negative number with a green candle. And once again, we're getting that point of control of that particular candle to close up here near the upper end of the range. And then we see right here, here's the candle that actually produces the wick, and we get a delta of negative 76. So now it's pretty obvious before this candle actually formed, we were already seeing multiple warning signs within the footprint chart that hold up. Even though we're getting a decent push up, maybe, just maybe, it's not as strong as it looks. We can see right down here from 940 all the way up here to 944, the S&P 500 had a 21-point move up. So if you're looking at it from a point basis, like, wow, look how strong the market is. It's just a rocket ship on the way up. We just rallied up 20 points. Well, then if I scroll this over to the right just a little bit more, notice you can see we came all the way back down to the candle that started the move that had that negative delta. So there was lots of opportunities, but then look what we get once again. If we just simply follow the delta right down here at the bottom of the chart, and I want you guys to go ahead and we're going to analyze this bar by bar. On this down candle here, we have negative 76 delta. The next down candle, we have negative 172. The next down candle, we have negative 342. So we can see the strength is growing to the downside as price is pushing lower. Now this point of control right here on this 946 candle is closing kind of in the middle of the range. But then look what we get right here. We get a big nasty red candle, a much larger range candle. But look at the delta. The delta for sure was not as great as it was on the prior two candles. But then look at where the POC is for that particular candle. It is in the lower third of the range. Again, another warning sign that, hold on, maybe we're going to start to see the market firming up here just a bit. And you can see the market ended up rocketing up. Now, we did have some warning signs as we started to move up out here in the market. The point of control closing in the upper end of the candles, which is something I don't want to see. But we can see that the delta did start to get stronger on the way up. Now, on this whole push on the way back up, also look at the delta. The delta continues to rise on the way up. We only had one candle where the delta didn't rise. It went from 425 to 40, then to 80, 196, 300, and then right up here, we kind of have a doji-ish looking candle at 956, and we have a delta of negative 258. So at minimum, you might want to think about doing something with the stop loss order, tightening it up or something along those lines. And you can see we had a lot of candles actually on this move up where the point of control was actually in the upper end of the range. Again, that also makes me a little bit nervous as we're going up, because I already know that's one check mark that could be signifying a reversal in this market. Now, if you guys would like to learn a very specific footprint chart strategy with using the delta down here at the bottom to better time your entries, then make sure to watch this next video right here.